work with your tax professionals to use tax loss harvesting and to save big on taxes. Today, I'm joined by Justin Macari. Justin?
Hey guys, happy to be here. My name is Justin Macari, founder of Mac Tax CPA. We're a full shop tax firm. We help you with your personal and business taxes, as well as we have a specialty in crypto taxes for personal and business. We've been working with ZenLedger now for about 3 years, still our preferred and recommended software. So happy to be here talking with you, Pat.
Thanks. And we have tons of customers that have worked with Justin and Mac Tax, and they always have great things to say. So quick legal disclaimer, I'm not a tax professional. Justin is, but he's not your tax professional. So please engage with him if you need some legal, tax, or accounting advice. And we'll just go over a number of topics here that are, for you to consider and discuss. And if you want to dive into any more in any depth, please reach out. So ZenLedger's been around since 2017. We've been through many boom and bust cycles and have been here to help you. We have a lot of support of legacy blockchains and exchanges that no longer exist, but you still need to account for them because you were trading on them. And we add new blockchains, new NFTs, new DeFi, new meme coins as fast as we can and take requests. So if we don't support something that you use, please let us know and reach out. We have IRS government contracts that we work with, so you kind of know our stuff is accurate. We work with multinational companies that have over 50 billion of assets under management that trade internationally, and some of the best partners in the world. MetaMask included. Mark Cuban's one of our investors, including several blockchains. So happy to work with you, and rest assured that the software is industrial grade. We'll go over a few things today. Tax loss harvesting, what is it? How to use it? How does it help you save on your taxes, income, and capital gains in this current year or in the future? There are some new IRS rules and some developments there with some warning letters going out that we can talk about. We can show you how ZenLedger specifically can help you with tax loss harvesting, looking at your entire crypto portfolio, and talk about some other tax strategies, and then some Q&A. So Justin, what is tax loss harvesting?
So tax loss harvesting, excuse me, is just the exercise at the end of the year where you're looking at your portfolio, whether it's crypto or stocks, and ideally you want to be looking at both to figure out what are you holding that's at a loss and what can you sell to realize that loss in the current tax year to offset your capital gains from other sources. So if you have a big capital gain, let's say you sold some Apple stock, $50,000, but you bought a bunch of coins that you haven't sold yet, and you're down $20,000 unrealized, a good general strategy is to sell those coins, realize that loss of, say, $20,000, and that will help offset your gains from other capital gains throughout the year.
Yeah, that's a great point. You have different buckets, different piles of tokens, right? So your Bitcoin might be up this year. You bought 50,000, it's 100,000, but you might have bought some meme coin at $1, and now it's at 50 cents. So you can sell the meme coin tokens for a 50-cent loss on each one to offset the Bitcoin gains that you may have sold. Yeah, so very, very general, but we can get into more specifics here. Why will you benefit now? Because we're coming up on the end of the calendar year, and the IRS does January 1st to December 31st, and there's been a lot of market volatility. So like we mentioned, there's been a lot of ups and downs. You could have bought Bitcoin at 101,000 and it's at 95,000, and so right at the end of the year, you can get a little tax loss harvesting in there, or some other things.
Also, too, it's a good time to go back and see maybe you haven't done your reporting for a down year like 2022, and you can go into ZenLedger, calculate your crypto taxes, and if you have significant losses, capital losses carry over at the IRS level indefinitely. So you can carry those forward and maybe amend your 22 and 23 returns if you have big gains in 24 or expected big gains in 25. So let's say you have $100,000 of losses. You can use up 3,000 of that each year, and then the rest, the 97,000, will roll forward to the future year, and which can be used dollar for dollar against future capital gains. So you may not have lost money this year, but you may have lost it in the past, and now you're back in the game and you're making money. But why pay tax on that full gain when you've lost money in the past? So it's good to go back, calculate it in ZenLedger so you know your losses, as well as amend your return and carry those losses forward so you have the tax benefit of those losses for future years.
Yeah, and these can go into other buckets too. So if you have stock gains or losses, you can combine them with your crypto trading. Can you also do it with buying and selling houses, the capital gain loss there?
Exactly. Yeah. Capital gains on real estate as well. Anything that's capital gain in nature, you can use these capital losses against.
Okay. And we actually have one of our earliest investors was trading and was early at Coinbase and was trading a lot of crypto. And he realized he'd used ZenLedger, realized he'd overpaid the IRS by $250,000, sent that in a refund request. The IRS said, well, we'll just audit you. And then he won the audit and the IRS refunded him $250,000. So there is something to be said for restating your taxes once you have all your software, all your trades in there, a tax professional has looked at it.
Absolutely. We've seen a lot of people go back and sometimes they have to pay some money for some years, but other years they've lost money. I think everyone's probably been down and lost some money in crypto at some point. And it's, losses are always good for taxes. So they're a benefit to you. You can carry those forward, whether it's a capital loss or you're trying to claim the Ponzi loss. If you're involved in Celsius or FTX, these are real dollars and cents that you'll be getting back at the when you file your tax return.
Yeah, and absolutely, we can help you with the failed exchanges like Celsius and FTX, and we can help you with the rug pulls as well. Justin, a little bit more in depth here.
Yeah, so we talked about this briefly. You can use $3,000 against your other ordinary income. So if you have a W-2 job, you can use $3,000 of those capital losses. So let's say you had a $100,000 loss. You can use $3,000 of that in the current year against your W-2, and then $97,000 would roll forward to the future year. And then if you had that $50,000 gain, whether it's on a sale of a stock, sale of crypto, then the losses offset that gain dollar for dollar, and you effectively would pay no taxes. Another thing which I will touch on as well, crypto is kind of good because it's not deemed a security, so the wash sale rule doesn't apply. So if I think it's going to go back up, you could sell it. You could realize that loss and buy it back, before that 30-day window that the wash sale rule specifies.
Yep. Yeah. So the wash rule is it's a law passed by Congress that specifically says you cannot quickly trade securities, and nowhere in that law does it say that crypto is part of that. So the wash rule does not apply, which is a great thing to use. It is a huge benefit here.
Absolutely.
The other thing to note is that even if you never trade crypto again, you sell $9,000 of crypto at a loss, you have that $9,000 for the next 3 years. You can subtract $3,000 of capital loss going forward, and then so just something to keep in mind there. There are a couple different accounting methods you can use in ZenLedger: first in, first out, FIFO; last in, first out, LIFO; and highest in, first out, HIFO, which is kind of a tax liability optimization method, if you want to go into it a little bit more, Justin.
Yeah, so when you're first getting started using ZenLedger, you can pick your method that you want to use for going forward. And if you're buy and hold from a long time ago, you may want to consider FIFO to really lock in some of those long-term capital gains. Or if you're just trying to pay the lowest amount of tax, have the lowest gains and highest losses possible, and you don't care about holding period because you're trading often, highest in, first out is generally a great methodology to use. The IRS specifies you need a specific identification tax slot when using anything other than first in, first out. That is built into ZenLedger. You'll see on the 8949 reports the ID associated with each disposal. And what highest in, first out is if you bought Ethereum for 2,000 and you bought another Ethereum for 4,000 and then you sold one Ethereum for 3,000, the system is going to prioritize the highest cost basis first. Whereas first in, first out, it's going to prioritize the first ever crypto bought, and it's not going to look at cost basis when picking a disposal.
Yep. And so in a rising market like right now, last in, first out will usually have the smallest capital gains if you're kind of trading and things are always going up. But there is a little bit of volatility here. And I find it's easier to think about this in terms of like you have a lumber yard and you're pointing at like the newest lumber that came in versus the oldest lumber that came in, and maybe some of it's a little rotted, and you kind of want to pick and choose which ones you want to sell. It's easier to think about physical inventory here than digital currency, but
Yeah,
um,
because no
yeah.
one's ever buying exact amounts. There's always the gas fee that needs a tax slot and a cost basis. So really, I've still seen some people trying to track their crypto in Excel, and it really is a nightmare. You're going to unfortunately make errors. This is something where it's very time consuming, especially if you're doing it in Excel. So, you're going to want a software that the IRS even uses to recomputate taxpayers' crypto to crunch the numbers for you. This way, you as the taxpayer, or if you're working with a professional, can focus on just making sure in the software your wallets and exchanges are imported. And to go off topic a little bit, I think that's probably the biggest component that we see with people that I want to stress is when you're working with a professional, or if you're doing this yourself on ZenLedger, the biggest thing is step one is getting all your wallets and exchanges imported into the software, or creating a custom CSV to import it. So that's including your wallets by blockchain, your centralized exchanges, like Pat mentioned earlier on, legacy ones that you might have used at one point, but it does affect your cost basis rolling forward. And that's very important because you never end the year totally liquidated of all crypto. So it's very important you get all of your wallets and exchanges and cold storage linked in there in order to, that's step one, in order to do the proper calculation to figure out your gains and losses.
Justin, this might be a good time to take a question from a viewer here who says, how does HIFO LIFO apply in the context of safe harbor?
So the IRS rule is if you don't have specific identification numbers like we talked about, you have to use first in, first out. But if you're using a software and a system where you are specifically identifying the crypto when you purchase it, you can then use a highest in, first out, or last in, first out when you're disposing of crypto. So
And
using a
yeah.
software like ZenLedger allows you to use one of these methods that's permissible with the IRS.
Mhm. And then I understand you can change your accounting method between one year and another, but you generally should stick with one because it kind of raises red flags with an IRS examiner, right?
Yeah, we generally recommend sticking with one method once you pick that method. This way, there's no unused cost basis or situation where you have gains or losses that may have been flip-flopped between years.
Cool. Anything else on tax loss harvesting you want to talk about?
Um, just to go back to my original point about importing, now's a good time of the year to take the time, sync everything up in ZenLedger, and take a look at all your crypto. There is a report in ZenLedger that allows you to take a quick look at your tax loss harvesting. That's a very helpful report. And also, if you're confused at looking at this big report, or you're not sure, you could always create a manual transaction in ZenLedger. Say, oh, what if I sell one Bitcoin right now? What's my capital gain or loss going to look like? And you can plug it in, and then you can just go ahead and delete that transaction. So you can play around with the system once you get it up to date. So step one is importing everything. Step two is making sure everything's categorized and you have the correct USD value for each transaction. And then the fun part comes in, where if you're listening to this webinar, you're probably ahead of the game, where if you do step one and step two, then you can look at where you stand year to date and do some tax loss harvesting on your crypto and sell those digital assets that you may not even realize you're holding at a loss, to help offset gains from other digital asset stocks, real estate capital gains, and any other capital gains that you have throughout the year.
Oh, yeah. So this is, number one, record keeping and is really important in getting stuff into the system. So we have customer service that's 24/7 that will help you enter in stuff. You can purchase some time from some of our dedicated staff that have kind of a higher accounting certifications as well, or when you're working with a tax professional, to make sure everything's cleaned up and in the system. And then you get outputs like this tax loss harvesting, which you can use all the way through, the evening of December 31st to make your trades, see what is trading at the biggest losses, the biggest bang for your buck, to sell in your in your portfolio. So you can just kind of fractionally sell too. Say you have, there'll be tranches, right? So, say you bought Solana at 4 times during the year, and the first 3 times you bought, 25, 25, 25. Last time you bought 25, but now that last 25 tranche is trading at a loss. You can sell just that last 25 Solana that's at a loss, and you don't have to sell the previous, 75 Solana that you bought that's all at a gain right now at the end of the year. So you can just sell, portions of tokens. You can sell all the way to um, the max amount of loss you have. The same thing with stocks and crypto. You can sell any fractional amount to realize any gain or loss that you want to for tax purposes.
I think we have another question here. Do you have to sell all of a coin to qualify? Which you answered that. And then, or if you can't get things linked in there, if you creating the custom import or purchasing time for someone to create a custom import for you is the best way to handle that.
Mm-hmm. Yep. Let's see here. Let's take a look at.
So we have a question here. Say if I have a coin that went to 0 and I can't sell it, how can I use this to offset gains? I recommend just disposing of it. So, there's burner wallet addresses out there. There's other programs where you can send it to get rid of it. But if you just sell it and get it out of your control, or at least dispose of it out of a wallet where your control, that can be deemed as a sell. And that helps, as opposed to, writing it off as worthless to show that it actually left your wallet.
Yep. And then NFTs are difficult because they're also kind of an illiquid market, and the value is in the eye of the beholder a little bit. Do you have any, thoughts on how you value NFTs in your portfolio?
Yeah, so NFTs, it depends how you acquire them. So if they were airdropped to you and there was no market for it, you could say your cost basis was 0. Generally, what we do is we look on OpenSea and see what they were trading at. So if an NFT was dropped to you and they were trading for around $100 of USD value, that is $100 of income. While we're on the topic of planning, staking income, staking rewards are taxed as income. So if you have $10,000 of staking rewards, that cannot be offset by capital gains fully. It's limited to $3,000. So it's a good time of year to also run your numbers through ZenLedger and see how much staking income you have for the year, because when you receive crypto, it's taxed as income at the fair market value that you receive it, and that then becomes your cost basis. But for NFTs, if you trade Ethereum for that NFT, the value of the Ethereum, say you spent 1 Ethereum at 4,000 for 1 NFT, that NFT cost basis is now $4,000. And you have to recognize a gain or a loss on that Ethereum from the date and price you purchased that Ethereum at.
Yeah. And it's also, so like you buy 1 NFT for 1 Ethereum at $4,000. The value of that NFT is 4,000. If you can now sell it today for 1.5 ETH, but ETH's trading at 2,000, so it's $3,000. You actually have a $1,000 loss on that NFT. Everything goes back to dollars, not amount of tokens.
Yeah, that's a great point. That's always an example I use when speaking to my clients. The hardest thing to wrap your mind around with crypto tax is everything's a taxable event, with the exception of buying with USD and self-transfers. And even self-transfers, you have a small capital loss for your gas fee that you're selling for $0 in exchange. But absolutely, everything converts back to US dollars. So if you're trying to figure out your NFT cost basis, you have to look back to the way you acquired it. Whether airdrop or swapping one digital asset for it to figure out your cost basis, which ZenLedger has a nice feature where you can sync the two up as a trade, where you swap the, let's say, Ethereum in our example for the NFT, and it will track it for you.
Cool. All right. I think we're caught up on the questions so far. A couple other things to consider here. Justin, do you want to address any of these?
Sure. So we talked about accounting method, first in, first out, last in, first out, highest in, first out. Charitable donations, you can donate your crypto for a donation, but there are rules that say you have to get it appraised if it's over a certain amount. I believe it's $5,000. But these are you don't have to donate crypto, but donating crypto or stocks is a great way to get tax benefits, because you may have a cost basis of $20, but your fair market value is $100, and you get a charitable donation of $100, even though you bought it for $20. So that can be a very useful, helpful strategy if you are inclined to give to charity and you want to lower your tax bill. Remember, the standard deduction for single is $14,000 and double that for married. So you want to make sure that if you're donating to charity, you want to make sure your charitable contributions, along with your interest on your home, property taxes, medical bills, are close to exceeding that standard deduction to try and plan for tax purposes. One thing I recommend, if you want to give to charity and you want to give, say, $5,000 each year, double it up in 1 year, do $10,000 to really maximize your tax benefits and try and exceed the standard deduction amount. Consider your holding term. Long-term capital gains are taxed at much more favorable, lower rates than short-term capital gains. Short-term capital gains are the same marginal tax rate as your income. So if you're in the highest bracket, that would be 37% that your short-term capital gains get taxed at. And minimizing taxable events. So for those people who are day trading, let's say, you're racking up a lot of taxable events, or if you're just doing some short-term trades and you're reinvesting 100% of your proceeds into the next trade, you could get caught off guard where you're riding the market up to the top. You're incurring a lot of taxable gains, but you're reinvesting 100% of the money, which is part of your tax bill, into future coins. And now we're close to December. If the market were to go down and you lose a lot of money in January, you won't get that benefit for the 2024 year. So you're stuck paying gains now on money you don't have. So you got to be very careful if you're doing a lot of short-term trades, because everything is a taxable event.
Yeah, and then there's some rules around gifting to your kids, and so again, you take a fair market value of the tokens or the NFTs, kind of mark it down, put it in your tax filing, right?
Yep. Yeah. There's an annual exclusion amount that you can give to them, and then if you exceed that annual exclusion amount, the fair market value, you want to file a gift tax return. Generally, for most people, you're not going to pay any gift tax. Every person, I believe the number is around 14 million, is a lifetime exemption where you can gift or pass on assets to people without incurring the inheritance estate tax. But you just want to make sure you file that form to show the government that this was in fact a gift, this is not income to the recipient, and that you filed it to show that the intention of the giving of the crypto was a gift.
Yeah. And so there's a new administration now in the United States, and there's an increasing kind of adoption in Europe of crypto. So there's a lot of thought right now, and we have no idea that crypto markets will be a little bit more favorable. At least the governments will be. You won't have Operation Choke Point 1 and 2 or whatever, and you have a lot more voices higher up in government that are favorable to crypto. So just some things to consider long term. That tax rates may change, tax treatment of crypto may change. There may be some international tax treaties between the U.S. and EU. There may be more countries that adopt Bitcoin as legal tender, or countries that start issuing their own digital currency, digital dollars, digital euros. So it'll be an ever evolving thing. So please we'll send out as much content as we can. We'll always have webinars whenever something kind of new and important comes out as well.
Absolutely. That's a great point. Definitely the tone around crypto is much more favorable with this administration. So it's interesting to see how that's going to play out. One thing that I'm seeing on my end that we were talking about prior to going live is the increase in the CP 2000 notice and audits that we are seeing from the IRS. While crypto has been down in 2022, notices have ticked up. The IRS has been sending out way more notices. The CP 2000 is an automated notice where they report on your return sales that they received of crypto from a third party. So let's say BlockFi sent transactions to the IRS, and they show your cost basis as zero if you don't put it on your return. So think of buying Bitcoin at 30,000 and selling it for 60,000. But the IRS is going to say, well, we see you sold it for 60, but we don't know your cost basis. We're seeing from a third party like BlockFi or some other exchange that was sold. We're going to assume $0 cost basis, and you have 30 days to tell us what your cost basis was or show us otherwise, or we're going to send you a bill and start the collections process. So that's something where now it's already 2024 and you're trying to scramble, engage with a professional, go back 2 years, get your cost basis, set up ZenLedger, and you're scrambling and you're paying extra now to fight the IRS and fight this notice when you may not even have access to those records anymore. So it's extremely important to stay on top of this, because if they do find out later, it's going to be way more timely and costly. And on a even scarier note, we have seen a lot more audits where if crypto is not reported at all in the tax return and the IRS catches wind of it, again, they get information from third parties, or they can just do a general audit, and they see you're receiving crypto and you're not reporting this as buys and sells, they deem all of the receiving crypto as income. So think of if you have 3 exchanges and the IRS had access to one of them, and you're making self-transfers among the exchanges, but the IRS only sees one exchange or one wallet. So they see all this crypto coming in, and they're not on your side. They're trying to collect money. So they see crypto coming in. They're going to assume the least favorable outcome for you, that it's income. We've seen audits where people are buying crypto, but the IRS deems it as $1 million of income. Meanwhile, it's probably $1 million of proceeds and $1 million of cost basis. They were just trading and making self transfers. So I really can't stress enough the importance of handling this. I've been, my wife likes to make fun of me that I say it's the first question on the tax return, because she could basically repeat my lines at this point. But there's a reason why it's the first question. They're taking this very seriously, and when those notices come, the amounts due can be quite mind-blowing.
Yeah. And so, Justin and ZenLedger can help you with audits. We can also help you kind of piece things together, as most people will not keep perfect records over years. So our software will point out the holes, like, hey, here's 3 wallets that we found that are not marked in your possession, but they look like they are. Are they yours or not? And then it'll turn out like, oh yeah, that's my Solana wallet or my 4th MetaMask wallet that I forgot to add. And then that'll help clean things up. It'll completely change your returns over years, and it'll let you produce a completely coherent trading history for tax loss harvesting, for audits, for anything else you need.
Absolutely. And, to that point, start early and realize this will take some of your time to make sure this is done right. But whatever time you put into it now will help save you a world of trouble later on.
Cool. I think that's everything we wanted to mention. We got to everyone's questions. If you want to, right now we have a coupon harvest for 20% off all the tax plans. Reach out to us. We can also put you in touch with Justin and his team if you want help from them as well. Oh, cool. Thanks, everyone. Happy holidays, and best of luck with your crypto trading.
Take care, guys.